Good morning, guys. Welcome to my channel, Real Estate Raw and Real. Today is Tuesday, November the 7th, and please remember to like and subscribe. So right here in Southern California, I have a buddy who is out of state. He does lending. I spoke to him the other day. I said, "What's going on?" He said, "Hey, not much, man. I've been a little busy." And I said, "You've been busy?" He said, "Yeah, I've been busy." And so he told me that he's been busy doing some refinance deals. And he said actually 8 out of his last 10 deals were refinancing transactions. And I was wondering, why would anybody be wanting to do a refi in this high rate environment when so many lenders have packed up, closed shop, businesses cut in half? That sounds crazy. That sounds absolutely crazy. And why would anybody want to do any refinancing right now? He said, well, I have clients that need to consolidate debt without losing their homes. And some people are trading their mortgage rates for higher ones because they can no longer qualify for a home equity loan or line of credit. So I said, oh, I never thought about that. So I guess, many consumers are accumulating records amount of debt to cope with inflation, and the cost of living is rising. And people are going deeper into debt, which is the only option for many to stay afloat in order to fight this inflation problem. But if you want one of these home equity lines of credit, of course, you're going to need to qualify. So what's preventing people from qualifying for a home equity line of credit right now? Well, there are several things. First off, I think lenders require you to own at least 15% of your home outright. And this can be a challenge for those who put only down 10% or less. It's a strong argument for putting down at least 20% when you buy a house. So let's say you live in another part of SoCal, or you're definitely in another part of the country where values might be flexy right now, coming down a little bit, and you only put down 3.5% on an FHA, or you put down 5% or 10% conventional down on your property. And if that's the case, there's a good chance you never even had 15% equity to begin with on your house. And so now that prices are coming down in your area, you certainly don't have that equity. So if you had put down 20% or more on your home, you would be in a much better position to qualify for one of these home equity lines of credit. Also, a solid credit score is something that you're going to need. If your credit score has been deteriorated since you purchased your home, having equity might not even be enough to secure a home equity loan. So let's say you bought a home a while ago and now the cost of everyday living is rising. You decided to start putting things on your credit card. You might not even have good enough credit score to basically get one of these loans. So your only option now is to trade your 3% interest rate for a beautiful new shiny 8% mortgage for a cash out refi. And that's absolutely insane. And the most significant hurdle is the debt to income ratio, which is often capped at 43%. So with mounting credit card debt, car payments, and mortgages, many find their debt to income ratios far exceeding this limit. And if you don't have 43% debt to income ratio, it's likely a total deal breaker, because people have been taking on tremendous amount of debt. And from the lender's perspective, that's just too much of a high risk situation for offering those home equity lines of credit. But they'll gladly give you a refinance because they're jumping you from a 3% rate to an 8% rate. So that's making them a ton of money. And of course, stacking on the origination costs and the closing costs and origination fees. Also, they're going to want to see is the 15% equitable position is the minimal lenders want to see to give you one of these home equity lines of credit. And sometimes that's just not enough. So that's just what is going on. And with rates, the cost of living and everything, people need to start reassessing their daily lives, and nobody really likes to hear that at all. So guys, really, thanks for joining me today. And if you like what you see, please subscribe to my channel. I'll be doing this coming at you every day from right here, Orange County, California. It's SoCal. Take care, guys. Thank you. Bye-bye.